Hello and welcome back to GoldStockTrades.com. Today we have back here with us today Corrado De Gasperis. Corrado is CEO of Comstock Mining. Comstock can be traded as LODE on the NYSE. Thanks, Corrado, for being here with us today.
Hey, Jed. Thanks for having me, Jed.
Corrado, we had significant news this week. Comstock announced the first quarter 2013 results. Tell us a little bit about the significance of the production and the production exceeding the planned run rates ahead of schedule.
Yes, we were very pleased to report yesterday that our targeted run rate of about 20,000 gold equivalent ounces per annum, which we sort of speak of as 400 ounces per week, planned for the end of April, we actually achieved by the end of March. And in fact, for the 6 weeks ended April, we were averaging over 425 gold equivalent ounces per week. So for us, it's very, very important that we deliver that rate. It really reflects us operating fully as we designed it for the first phase, and it puts us in a cash positive situation that gets there earlier than we had originally indicated.
Corrado, with so many junior miners struggling out there today, it's nice to see a company that's actually producing and getting revenues. Can you talk a little bit more about that?
Yeah, I think the most important part for us is that we're operating the system the way it's designed. It is delivering, both from the grade controls that we have in the mining of our modeled plan, the crushing, the stacking, that the metallurgical yields and the process is actually delivering what we expected it to do. So that's first and foremost. The system is working as designed. But secondly, and just as importantly, is that it produces positive cash for us. And to move into a self-sustainability mode has been always the ultimate objective of the operation.
Corrado, talk to us a little bit about the cash flow and the significance of paying down the debt early.
Yeah, so we had some secured debt. It was effectively amortizing and due by this summer. I think end of July was when the last payment was scheduled. It was also extendable to the end of the year, and in our current profile, it is most likely that it'll be paid off within the next month, if not month or two. And it not only puts a meaningful obligation completely behind us, but then the system is throwing off discretionary cash flow, and that is the situation that we want to be in, where we can finance, we can fund development growth, we can fund expansion of the mine and production operation, and we can fund ultimately the further development of the Comstock's gold and silver resources that are in the ground.
Corrado, let's talk about further development. During the first quarter 2013, you published an updated 43-101. In this 43-1, you talked a little bit about the report talked about the Chute Zone. Can you talk to us a little bit about the development and exploration upside here with Comstock?
Absolutely. We have overall 7 major high probability target areas. The Lucerne, which is where we're currently mining, a small fraction of the western part of that resource area, we've stepped out into the east, and we've had a tremendous number of high-grade discoveries. I mean, literally over a dozen discoveries with mineralization of greater than an ounce per ton, and even up as high as 3 ounces of gold per ton. The Chute Zone was the most recent discovery of a concentration of ore that not only has a thick, continuous nature of high grade, but also was quite reminiscent of the historic Woodville bonanza, which was also located just to the north in the same Lucerne area. from the old Comstock, the old historic Comstock lode days, where they had over 33 bonanzas that were discovered. So the notion of reestablishing those kinds of high-grade concentrations is beyond exciting for us. But I think putting it in the bigger context, we're in one tiny fraction of one of 7 resource areas. And so the connectivity in the technical report, we talk about the connectivity and the similarity of the Chute discovery, not only to other sections of the Lucerne, but also going down into the Dayton, our second resource area, and the Spring Valley, which is our third. So I guess what we're saying is that in addition to just the high grade concentration discovery that the Chute represents, right, it's giving us just an incredibly stronger geological control, geological understanding that speaks to a significantly more resources as we continue to follow the mineralized trend. Our trend is almost 6 miles long of contiguous mineralized strike that we have validated both through historical data, current analysis, and drilling. And so it's a question of getting to the rest of that mineralized strike. In fact, for the Lucerne alone, we now have modeled, validated, drilled, and reported on over 1 mile of mineralized strike. So, the Lucerne area alone is so substantial, and in the context of how much we've drilled so far, we still have only touched on a small fraction of its overall potential, let alone the 6 other areas that it's connected to.
Well, Corrado, thanks for being back here with us today and for giving us an update on the first quarter results.
Thank you, Jeb. I mean, we're looking incredibly forward to the rest of 2013 and how we've positioned ourselves, again, not just for positive cash flow growth, but also ultimately resource growth. Thank you very much.